again, I appreciate you for coming on the show again, just to be here on record. Really value your time because I know you're a busy man. So I would like to get to the point, obviously, and bring some value to the people who are watching or listening to this episode right now. As I mentioned, as you probably guys, if you're watching this on YouTube, you see Flint's background, and I kind of mentioned, you have a very interesting background, which, by the way, also have some related experience in particular sectors, and I'd like to talk about that company a little bit. But you got involved working with companies like Boeing, Commercial Airplanes. You worked there for 8 years, and then you transitioned working with Sierra Nevada Corporation. So that's for obviously you can tell that story a bit better than myself, but as part of the company that I've been involved, we also organized events. We had speakers mainly for aerospace and defense sector. And we had a person, Scott, I can remember his surname, Scott. He was from Sierra Nevada Corporation talking about the project with the Blue Origin, which is orbital reef, right? So
Yeah.
what got you again going, first of all, becoming an engineer, because I'm sure there's going to be a few engineers listening to this episode right now. What got you working with Boeing, Sierra Corporation, and when and how have you made that transition into real estate?
Gosh, it's such a long story. Blast in the past. I always loved aircraft. It was a thing that my father almost instilled in me because he was an aircraft geek and I became an aircraft geek. I wanted to be a fighter pilot, but I'm actually colorblind, so I learned that. That was a sad day when I was probably 8 years old or something when I found out I couldn't be a fighter pilot because of that. So I ended up taking the engineering route and decided, it'd be cool to design aircraft. So it definitely, long story short, made that happen. Yeah, I worked for Boeing for a very long time. I left there in 2014 after doing the 787. I worked not only when I got hired there, the 787 was 4 years behind schedule, so it was a grind. So we worked so many hours finally delivering the 787, and then we pushed to design the next derivative, the dash 9, 787-9. Finished the engineering on that, and then I moved on to product development, where I was working on future aircraft for Boeing. And to this day, the future aircraft I was working on still has not been announced. And putting it that way, for those who are in aerospace, it takes about 10 years from the pressing the go button, essentially saying, all right, we have architected an aircraft we think that the market will need. Now it's going to take us 10 years to actually deliver it. That's after probably many years of conceptualizing the next aircraft. There's so much that goes behind the scenes on architecting an aircraft, and I'm glad I got to see some of that. Yeah. But yeah, Boeing's having a tough time now, and I'm glad I moved on when I did. And then yeah, a few things happened between there. I actually helped run a composite shop, and we made composite parts and aircraft stuff. We made prosthetic feet. We did satellite parts. And then eventually I made it to Sierra Nevada Corp, but I was on the aviation side, not the space side.
Yeah,
as you mentioned.
Yeah.
Yeah, modified aircraft for the Air Force, which was a unique experience in of itself. It was you're trying to do interesting things to an aircraft that you're also trying to get certified by the FAA as much as practical, but you're also beholden to the military's version of the FAA. So you kind of have these two government arms that are trying to regulate you, and you're trying to put things on an aircraft where you're like, well, this doesn't fit within the box of regulation. So yeah, things just get really, really interesting there.
Yeah. And there has been throughout the history. I was just watching a documentary the other day, and I probably should remember the plane, but there was this incredible plane that U.S. Back in the day, they basically engineered this plane. Then it looked like a Concorde. It looked like that. I can't remember the name right now. I'm trying to find. Yeah, I probably cannot find that fast. So, but
Back in the day, or like a
back in
more
the day,
recent?
back in the day,
Oh,
it was a carrier. It was a carrier. It was more for just like the stealth is the stealth. I think it just had a stealth function. But basically, they
oh,
were
okay.
talking about all the time that it took to develop because one of the U.S. Companies won the contract to deliver the plane, and I think they were competing with a big corporation outside as well, one of the aviation companies, and it took them over a decade to deliver. And at the end, it just like it took so much time that Russians started to build some new things, and
Yeah,
that's how it is. That's how it is,
it was
right?
already old technology by the time it's delivered. I mean,
Exactly.
we said that about the 787. We're putting this, everyone's like, oh, carbon fiber is newfangled technology. Well, no, the system we were using, it was technically developed 20 years prior. By the time we delivered, it's 30 years old.
Yeah. Yeah, it's interesting, and obviously it's a very interesting space for people, which I'm sure, as I said, there's more than a few engineers who are listening to the show. And now we're talking about the space plane, which is again, Sierra Nevada
Yeah, the
Corporation.
Dream Chaser.
Yeah, that's just beautiful to see, and obviously they're involved in all sorts of different projects, and obviously very close tied with the military as well as you kind of took the
Yeah.
position. So, but I was looking at your LinkedIn and I was looking at the recent posts as well, which that's kind of what it is, and that's the reality of it, right? So academia, again, engineers, anything that's close to science, right? Those people take long time to make decisions, and I have personal
Yeah.
experience with that because obviously worked with academia as well, with the scientific organizations like AMS, or American Meteorological Society, or NASA, or JPL, and
Yeah.
we're making those conversations happen. And it takes so the cycle to close a conversation is so long. So, and obviously
Yeah.
you talked about 3 days ago, right, that you thought about starting 10 years earlier, right, and you kind of delayed the
Yeah.
decision, right, and you kind of for maybe being a part of that, being engineer, right, is just like the way
Yep.
your brain operates, right? So maybe you can talk about that. So why did it
Yeah.
take 10 years, and when eventually have you decided, okay, this is the time?
So it's an interesting conversation because you got to think about us in the aerospace industry as engineers. We are trained now to act with extreme caution, and it's kind of like built in us, analysis paralysis, because when things fail, there could be human lives on line. Uh, that, and we've put a lot of regulations around us that slow us down so much that we hem and haw and try to think through every situation, but you can never think of all the problems.
Mm-hmm.
And to be honest, the scary part is the regulations that aviation is driven by is mostly written in blood throughout 100 years, throughout a century or more. Because it's things we don't think about, and an accident happens, and then we're like, oh, well, now we know. That was an unknown unknown.
With the Challenger.
Yeah, yeah. I mean, there's even so many incidents that happen that that don't kill people. I mean, there was a 737 in the heyday of trying to get the 787 out the door. It had a fuel leak, or a puncture within the main tank. Fuel leaked out the front spar, ran down the leading edge, and dripped onto the hot engine, caused a fire. It actually leaked in the air, but it didn't matter because as it was leaking, it was getting blown back. Once they landed and started taxiing, it started dripping on the hot wing, or on the hot engine, created a fire. Everyone got out. It was fine. But out of that created more regulations. And out of that, I was working leading edge, had to go to the FAA and say why the 787 design was different, and it would prevent that from happening. And what had happened was a mechanic didn't tighten a bolt well enough. And so a bolt fell out of the sector gear as it was the slats, right? As they retract and they go back into this sealed can, the bolt fell out, punctured a hole. So that was a total rabbit hole, but yeah, there's so many stories like that. But when we branch outside of the aerospace realm, like what I'm doing now in real estate or what people do with investing, you don't have to think as cautiously. And this is where it goes to my comment today. It's you will never know 100% of the information. So sometimes you just need to take action. And knowing that successes, if you look throughout history of all the people, look at Amazon, look at the like Larry Page and those guys creating Google, they had failures all along the way to create that success. And sometimes you have
Yeah,
failures as part of the path.
more than everybody else. And I think that's a bit, do you believe that's a big portion of the success, that, you know, people are just, you know, we're too comfortable in a comfort zone. They don't want to fail enough, because I made that personal made that decision some years ago, and probably I should remake that decision once again, because I don't believe I'm failing enough. That means I'm not trying big things enough, or often enough to
Yeah.
pursue the next thing. So you believe that's a challenge for people, right?
Yeah, right. And then there's the other aspect where people always think that their worst fear will come true. But if you look back, hindsight, how many times has the worst happened?
Yeah.
Like when we get into investing, you know, people invest $50,000 on minimum with us, and we make sure that people are financially in a position to where, because it's investing, you can lose your money, whether it's in the stock market, you're buying gold. Some things are more risk adverse, but sometimes you will lose to get to the big gain. And we make sure that people can take a hit. And fortunately, sometimes you do take a hit. I've taken a hit, but there's a great quote by Layla Harmozy, if you know them, Alex and Layla.
Of course, yeah.
She said somewhere along the line, if you want to make $100,000, you're going to lose $10,000 on the way. I mean, even if you want to make $10,000, you're going to lose $1,000 along the way. They are now the mental mindset, because they are searching for that $1 billion revenue. She knows they're going to make $100 million mistake somewhere along the way to get to that $1 billion. So it's a shift in the mindset. Because Warren Buffett says rule number 1 is don't lose money. Rule number 2 is don't lose. But he's lost money. He's lost money on the way. You can watch his track record. He loses money.
But Flint, the key here is, Cuban was also talking about it. I've seen it in a recent interview, that he said that he said, I made 1 million mistakes, 1 million bad investments. Well, maybe not 1 million. Of course, I'm exaggerating, but you know, plenty, right? In a normal human eyes. But he said, nobody remembers me for those failures. They just remember for the wins, right? So he said, you know, the losses doesn't matter. All it takes is one win, right? Or making that decision. But how are you going to make decision if one thing that you don't have is experience? So that's where that failure comes from. I mean, it's impossible. It's chicken or egg, right? So it's like, you need experience. You cannot build a plane without having experience. And if you're looking to build one, you're going to be making some mistakes. As you said, there might be losses. There might be some things that are not going to work out. But until you continue to progress and learn from that, you know, eventually you're going to get to that point. So.
I mean, look how many rockets Elon blew up before he had the first successful launch.
And
but I mean,
you need some luck. As the last flight that he took on, there was some luck together with that.
Oh, absolutely.
But as some of the famous people said, that, you know, I heard the quote: the harder you work, the luckier you get. So, and odds start to play out on your side. So I think that's what people need to do.
And you learn more from failure than you do success. Now, with that, I don't want people taking this message away of, well, I better just go fail at things just to win. No, the goal is to do your best, but you're never going to know everything. So just take action and take action based on what you think is the best approach. And then it'll happen. You'll have a success here. You'll get kicked there. But it's the only way, I think, that you truly move forward. Because if you stay in your comfort zone, you're not going anywhere.
Oh, definitely not. And obviously you moved out of that comfort zone. Well, again, you know, I don't know if I can say that, because you've already been doing big things, you know, working with big corporations on some of the important projects. Going back to Sierra Nevada, you managed $150 million aircraft modification, working for Air Force. So it doesn't seem like that's it's not comfortable position. It doesn't sound like that. But obviously you made the move, you transition into, because those transitions are painful, uncomfortable, obviously. But you made a transition, and now we're speaking, you know, with you, and you're the founder of Vestus Capital LLC. And the company is based in Denver, right?
Well, it's based on wherever I live at the moment because I work remote.
Yeah.
So, but yes, I mean, I am from Colorado. Right now, I'm temporarily living in Virginia.
Here we go. So we're gonna say right now Vestus is in Virginia. Um,
Yeah.
but but again, the investments, the type of investments that you're finding, you know, if you guys want to look at the portfolio that you currently have assets under management over 2,000 units, right? So
Yep.
I'm looking at Houston. You have Columbus, Ohio. You have Foley, Alabama, right? I would assume.
Yep.
Texas and Arizona. Augusta, Georgia as well. So why those particular markets? So when you decided to start syndication, because they primarily do syndication and construction as
Yep.
well. Yeah. So why have you decided? What made you into that decision? Obviously, where the conversation took place, and you said, okay, I like to kind of move towards the Sun Belt and start looking for these properties there.
Yeah. Multiple answers here, but in general, the Sun Belt has, well, actually, where all the properties are a lower cost per door.
Mm.
But in general, I'm location agnostic. So for those who don't know, I do apartment syndications, and we fix and flip apartment buildings. Is I would say the most cookie cutter business model we have. Stand by. I have a child joining me.
That's awesome. We're gonna get some young mind knowledge right now in a second here as well. Maybe sharing what are they watching? Are they watching cartoons? Or are they watching a movie or something? Maybe maybe we can get some insight.
Yeah, well, they were watching um, the Olympics, but then that
Oh,
that got boring. So now I'm letting them watch a kid show so they don't disrupt me when I tell them not to
with
disrupt me.
with Olympics, you have to be careful. You only want to watch that so much, you know, as what's happening there as well. I mean, it's crazy to watch. Um,
Yeah, it's a lot of screen time, unfortunately, right now, but try to make sure they're whatever screen time they have isn't just mind melting stupid stuff.
yeah. You have to, yeah, you have to control it. Yeah, sure. So, but speaking about the property, so you mentioned again, you don't look to what you're looking for is a good deal, right? It doesn't matter.
Yeah,
Again, you're looking for return.
yep.
So, but again, these are different markets. And again, how big is the team right now at the moment?
Yeah. So yeah, to expand on the role I play, I was originally gonna form my own team or partner with people and be my own operator, and we were gonna run our first asset out of Denver.
Right.
Um, that didn't end up happening. That's another story for another day. But um, what ultimately happened was I ended up training myself up to become a capital raiser because out of all of these teams,
Yep.
there's players in every. It takes a sizable team to take down a bunch of assets. I mean, you got acquisitions people, capital raisers, you have asset management,
Yeah. Yeah.
and the greater the portfolio, the bigger the team goes.
Yeah.
So I found myself serendipitously in this capital raiser role where all operators or many operators need help with capital raising because operators can mostly continue growing their portfolio as long as they can find good properties, but they start being limited in how much money they can raise because their investor base is only so large as well.
Mhm.
So my first taste of this was a couple of friends of mine and operators had invited me onto a deal with one of theirs, and I was like, "Cool, yeah, I'll co-sponsor with you guys and raise some capital." And
Mhm.
that's when I found out this is the best part is, you know what, I can be a fund manager, a capital raiser, and partner with good operators across the country. Hence why I'm agnostic.
Yeah. Without
Uh,
without
I
actually day-to-day operations of the property, right? Without being
Yeah,
part.
because I don't need to be the boots on the ground, the asset manager. I'm not the one working with the local brokers.
Yeah.
So, and I can be more remote, which benefits my lifestyle more. Now, capital raising isn't easy. It's definitely an uphill
Okay.
battle as well. But now I found myself in a position where my friends and family and investors can invest in a diverse portfolio that isn't pigeonholed into one location.
Mhm.
So as I say, if you invest with someone, a primary operator, you want to invest with the one who's the expert in their niche. So they're like Class B value add assets in Denver.
Mhm.
But if they're the only operator you know, you're only investing in Class B value add assets in Denver. But what if you want to branch out?
Yep.
So that's kind of where the benefit of me branching out. I'm doing all the due diligence with sponsors. I'm looking into the markets as these deals approach. So
Mhm.
I'm helping my investors diversify, and I'm doing the majority of the legwork up front.
Yeah, 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 yeah. So, so again, you have a fiduciary responsibility, obviously, of the,
Yep.
so, but again, as well, I'm looking right now at these deals. So, and so again, are you raising for accredited, non-accredited, or both?
I raise for both.
Okay.
Um, what's interesting is I find more deals that are accredited only, but
Yeah.
yeah, I do bring in sophisticated investors as well. Oddly, that's where a lot of the engineers sit, because engineering is weird. You start out with a good pay, but then you cap out really early, and it's, unless you're like working computer science or software and tech space, those guys are making boatloads. But like mechanical engineers at aerospace, working in aerospace, yeah, you sit in this, I'm making good money, but I don't yet have the accreditation level.
Mhm.
So that's where we bring in, I like to help out my colleagues that way.
Yeah, that's cool. So, and for the properties, can people invest with you? I mean, in this individual properties that are being under contract, and again, if you're raising for those properties, or are they also can invest in funds? Do you have like
Yeah.
multiple property? Yeah, you can also do that because I see you have.
So yeah, every opportunity can come with a different flavor to it. Like the Houston 3-pack is a portfolio, so we
Yeah.
call it a fund because you're investing into a portfolio. So a $50,000 investment gives you 3 properties, and that was 660 units, which is really cool.
How's that different? So, so one of the objections I like to obviously get into conversation aspect of it, right? And I'm sure you're
Yeah.
talking with a lot of engineers, right? Again, in kind of in your background, what would
Yep.
you say the percentage of those people that are,
Of my investors who are engineers,
yeah, that you typically speak with? A lot, if you just say
yeah. I would say the majority of them
majority.
are
Okay.
engineers.
Yeah.
Yep.
So what would the typical objections look like? I mean, because obviously, if you have the PPM, obviously you're talking with them,
Mhm.
and obviously that's provided also by your members. And um, do people, ask, how is this different to the REIT and what type of,
Oh
return you
yeah,
have, how
yeah,
secure?
yeah, yeah.
So can you run this down? And I think it could be good again for people
Yeah,
looking to invest passively or just, new people to understand
yeah.
what typical questions they ask.
So, because you brought up REIT, let's talk about that really quick.
Yeah.
A REIT is, it's essentially it's real estate hidden within a mutual fund is the best way to describe it.
Yeah.
It's, you don't get any benefits of owning real estate other than it's backed by the tangible assets. So when I say benefits, you're not actually getting the cash flow. You're not getting any of the tax benefits. The fund manager, your Fidelities or BlackRocks, they're taking all of the tax benefits. They are taking the cash flows. And when there's a big sale, they take a majority of the capital gains and they give you whatever feels to them like the appropriate quote unquote good returns. When they could be making 35% returns, then they're giving you 11. And you're like, I got 11%, I'm beating the S&P. Well, okay, cool, you're beating the S&P. So branching into the next thing, society, actually, I'm going to say one of our societal norms is what the big financial industry has established for us. Because they have billions of dollars to to market and advertise and tell us what we should think. And part of that is the S&P 500, you can't beat that. 7-8% average year over year is the norm. Anything above that is doing great. Anything way above that is a scam or whatever. So I get a lot of, when I tell people we shoot for 20% average annual returns. Like, that is our goal. And when I show someone 15% IRR or 20% average annual return or 2x your money in 5 years, they're like, wow, that is really, really high. And then I'm like, and then that you get this like, is it a scam? Is it a pyramid scheme? I get all these random like, is it this? Because people are just like, I've never heard of this before, and the returns are too high. I can't conceptualize it.
Yeah.
Uh, and so it's just, it's an education. It's like, yeah, if you jump out into non-Wall Street driven things, there's opportunities. Oil and gas has it's riskier, but it has incredible returns, it has incredible benefits. I mean, just open your eyes to the world that's out there.
Yeah. Oh yeah, definitely. And it's a tremendous, it's a really great opportunity, especially for those who are looking to diversify their portfolios. Again, stock market is one thing, and I cannot say nothing about that. I'm not investing in the stock market, but when you have an appreciating asset, that you have whatever amount invested in, if it's 50K, 100K, depending on your net worth and the condition, depreciation. I mean, that's the big part that you talked about REITs. Like, you don't have the tax advantages that multifamily, these assets provide, which is again a big portion of it. That's how you can create infinite returns, right? If you're gonna
Yes.
stay in the deals for a long time. And I like to ask about that because the last deal that I see your team closed is on October 23, so last year, right? Are you actively now looking for deals that some of the investors will be have access to that, or what's currently happening with the Vestus Capital?
um yeah, I need to update my website. So October 23 was the 3 pack in Houston. um I I need to add, so I'm also doing development, so it's called build to rent.
Right.
Um, the current one right now is a $30 million fund where we're just going to build for the next 10 years in Phoenix. Ideally, always in Phoenix, but we can adapt. But the goal
And you already have a permit, or you're already in the start phase with that?
so we already have land that
Oh, okay.
we're building. So
Okay.
the gist on this one, it's 506c. We're still raising for it, but we're taking the law of compounding returns and adding it into real estate development. So when I told you like 20% average annual return, it's super high, it's crazy. Well, development, the way we're doing it, our goal is to 2x your money every 2 years.
Mm.
Because development, if you develop it and then sell the property, you can do it ideally in the 2 year time frame and double your money every time we develop a property. But the goal isn't just to say, all right, well, we did it 2 years, here's 2x your money. The goal is to take your 2x and put it into next set of properties.
Yeah.
And then again and again, do it 5 cycles. And after five cycles equals 10 years, you 32x your return. Now, whether we hit 32x, we're not going to hit 32x. We're going to hit something other than 32x on the dot. But the exciting thing behind that is, I mean, if we are half successful, we can 16x people's money in 10 years, which is way beyond what, I mean, our value add apartment business plans are. So,
and again, that particular property, the $30 million property, you said Arizona, right? So going to be Class A new property built. How many
yeah.
units are we looking at?
So, a lot. So the way this is being set up is we're looking to buy 3 to 4 properties, 3 to 4 pieces of land to develop in our first cycle. The second cycle, it's going to blow up from there. So every piece of land is a different size. The one we just acquired, if I remember right, I think it's 94 units. I probably got my wires crossed with another property, but it's along that order. And then hopefully we will get 2 to 3 more by the end of the year, and we will, I mean, it's go time.
Yeah.
Building 4 properties all in one go.
And again, in Arizona, so obviously I studied that recently as well. The supply, the current supply of units. I'm kind of looking at the projections here on my screen as well. That people can find, by the way, RealPage, or if they go
Yep.
to RealPage Market Analytics, they can find this information. So what is it like when it comes to unit count, the current unit count, and how long would you think the project, when is going to be built out, when is going to finish the entire 3
So
block?
yeah, I mean, the first properties, it's going to take us, assume it 2 years, say
Okay.
2 to 3 years on average. So in 27 to 28, we will, and that's like right now we're talking this massive oversupply and builders have stopped new starts. Well, we're doing the opposite. We're starting. So when the massive wave of oversupply recorrects and there's a big dip and now there's an undersupply, and that's when our properties will be coming online. So we're timing the market there.
Mm-hmm. Regarding the interest rates, how much did it change? Where your
Yeah, I mean, we deal with that in construction loans. But the interesting thing about the construction loans and interest rates is you pay interest on what you draw. It's kind of like a HELOC. For those of you just who go out and get a home equity line of credit, you have say $50,000 available to you, but you don't pay interest until you use it. So the same thing goes with construction loans. We can have an 8% loan, and then we start building. And we could have a $6 million loan, but we're only going to pay $100,000 in the first year, interest on $100,000 because that's all we drew. So the amount of money you pay in interest is not as bad as you would see it on a mortgage.
Yeah. So, but in general, the interest rates went up, or are they staying the same?
Yeah. I mean, no, they definitely went up.
They went up, yeah.
I mean, and that goes into the calculations.
Yeah. And obviously, Europe is being, because obviously I'm in Europe. So, as someone said that, when US gets, when US, sneezes, everybody else gets the virus.
Yeah.
Maybe it's not, but, it's starting with that. And obviously we feeling that as well here as well. And, European Central Bank is looking into it. And obviously, but what that means, that is going to be less spending and people more conservative. So it creates all sorts of problems, which again European central banks don't want to see. They don't want to see people not spending and not able to pay rent or mortgage. So but that also affects, increased interest rates affects labor costs, land costs, insurance, everything, all the pieces that you need to build a property, right? So it could be lumber, it could be, so how do you guys account that? And I mean, how big of a, challenge that becomes with the increase?
Interest? It absolutely creates challenges. And I think the reality is you just have to create strategies around the given market. And if the property doesn't underwrite to give you the returns you want, you move on to the next one. So I mean, we used to say prior to the interest rate hikes that operators would underwrite 100 properties before getting one. Now it's on the order of 200. So you're just filtering through more and more. Now, to your point on materials and insurance. So the materials, one of our strategies is we partnered with a builder who owns their own lumber, but on top of that, we know the price at this given moment for all things like toilets and drywall and all that. So we actually underwrite to the prices now, and we bulk buy all of that now. We bulk buy a majority of our material. So we kind of set a line in the sand that's, yep, we know exactly what it's going to cost, and it underwrites, and we get a return that we desire based on this cost that we've established. So that's one way to overcome, because we don't know what's going to happen in a year, 2 years, when we're going to need those faucets. I mean, the price doubles, at least we've already bought it.
What impact, I mean, and I asked a recent guest as well, and obviously he's operating in a different state, from where you are. You have an upcoming elections on November 5th, right? So how do you think, depending, regardless who's going to be there, how is that going to affect the markets? What do you think?
I don't I don't know. And I don't ever claim to be an expert. It's interesting because I always see articles about what the market does when a president takes over, and it absolutely does a blip, whether it blips up and then normalizes, or it blips down and normalizes, but there's always a blip.
Yeah.
And so I don't know, but there's a great book by I'll look it up. Uh Give me a second. It's it's a it talks about money and the psychology of money,
Hmm.
and he has a sequel, a second book, but in that he finds a study where they talk about how accurate are all the quote unquote experts, all the economists and everybody out there who
Yeah.
forecast things.
Yeah.
And they found an overwhelmingly our experts are wrong.
Yeah.
So
They're
it's
biased.
but
They could be biased because
they could be biased.
everybody has a different opinion for some
Yeah,
reason.
yeah. But in the end, it's just everybody with their crystal ball who's saying this is what's going to happen based on this my analysis, and their analysis is maybe not correct, or their assumptions are wrong. Whatever it may be, experts are wrong. But the funny thing, the psychology of humans is we have to have somebody to lean on. We have to have something to lean on, and that's kind of, it's like,
Yeah.
well, they say if Kamala gets in, the stock market's gonna spike up, so I'm gonna hold, right? You never know.
Yeah. Yeah, because that creates a lot of uncertainty in the marketplace, especially right now. And obviously, who knows what's going to continue to happen with interest rates. You again, U.S. just like any other country here in Europe is facing huge migration challenges as well. So we're looking at the
Yeah,
jobs, we're looking at the housing, we're looking at salary. So it's so, and who's gonna fix everything up? So they're expecting a leader to step in and to create some at least certainty, I guess. But sometimes
yeah,
it feels real uncertain, very volatile. Like what's been happening in the past years, it feels very volatile. In the economy, which is unhealthy, I think, and for people too. Psychologically.
yeah,
So what?
yeah. I
Sorry, go
Go
ahead.
ahead. No, I was gonna say, yeah, our psychologically, there's the the battle between the right and left, and it seems to be the gap is widening, and it's getting more and more volatile. And you're right, it's just it sucks. It's
Yeah.
not healthy.
It's not healthy, but again, those are the times. So I guess we just have to adapt to what's
Yeah,
happening, obviously, and not also adapt and capitalize on those opportunities. But that's where the experience comes in, as we talked in the beginning, right? So finding partners, which again you did, and finding the deals, which again you guys are doing, and you're looking to capitalize on those opportunities, moving into now development, right?
yep.
What do you think in terms of the next opportunity is going to be like? We're talking about Arizona, so now another market, right? So how much is that changing? I was also looking at the recent statistic because some of the markets right now they used to be hot, and I have that. I can recall which markets now getting cold, and some of the up and coming markets, at least by Zillow predictions, are getting hot right now, right? So
Yep.
we're talking population growth in different areas that was nobody knew about those places before. So how do you see that playing out with immigration and everything that's taking place in terms of your future investment decisions?
Yeah. Arizona is the interesting one because we saw something during COVID where all of a sudden remote work is normalized, and a ton of people migrated out of California, moved to Phoenix.
Yeah.
Um, Out of that, we saw a massive spike, just a huge amount of demand flooding in. We saw a massive spike in rents, and then it normalized, and the market recorrected there, and the rent increases have slowed so much or even lowered to where we're seeing, if you were to just extrapolate prior COVID to now, you got the spike in the middle, but the market has normalized. But yes, I think you're seeing massive migrations out of these big cities that cost too much to live in, and people want to be. You get this. The millennials is the largest generation now in their family forming years, and they want to start buying houses, so they're moving out of the big cities, trying to find a place that they can afford to live, and that's where you see these tertiary markets that are starting to become hot.
Yeah. And do you believe that again? And this is happening right now because obviously we're looking at the inflation rates, we're looking just at the growth of the income, which is very stagnant here in Europe, just like everywhere else, I guess.
Yep.
You know, we're looking also just like Europe, but I hear that all the time in the US. They're speaking about becoming a renters nation, which is probably
Mm,
true at least now to 60%, whatever that number maybe is, even higher. People
yep.
cannot afford to buy homes anymore, right? Like I've seen these
Yeah.
posts sometime on LinkedIn when where you know there was like a lady speaking about buying like home for like for $12,000. It's just like
I that was uh, that's crazy. I mean, that sounds like you could, yeah, you could have bought something in the 2008 crisis in Detroit, in a city where it's not worth buying a $12,000 house. Uh, yeah, I bought it. My first property was a duplex for $80,000 in Milwaukee, which in 2018 was still a really great deal. I mean, it was a heavily distressed asset. I had to put 30 into it just to renovate. But yeah, you don't see that now. To your comment about the renters nation, um, that gets brought up fairly often. On the You mentioned Real Page. So Jay Parsons had a post on LinkedIn, which I'm not going to be able to repeat very well, but he actually made a whole post about the renters nation um, theory or myth in the US, and based on his information, the data shows otherwise. Zillow, and part of this was like Zillow was out there trying to buy up all sorts of properties,
yeah.
but they failed at it. They laid off everybody. I actually have a friend and a partner who used to work for Zillow. As part of that, he got laid off because they failed at it. So some of
Well,
those
look,
corporations,
BlackRock is succeeding at that.
yeah, BlackRock is picking up. But there's also a huge challenge to owning single family homes, because to be able to manage, and this is why it's really hard to grow substantially as a real estate investor, to buy 50 homes in a city. They're all spread out. You have to have property management that's constantly driving around. There's no central hub. You don't really get economies of scale as well as rather than just buying a 100-unit apartment building and having an office there.
Mhm.
So I think they're going to struggle, and that's kind of where built to rent's coming in, where we're we're starting to create these single family home communities where you can just have an on-site property staff, 100 single family homes all in one place.
Yeah, one management, yeah, low
Yep.
cost. So that's great. Yeah, that's great. So maybe coming back a little bit to the investor conversations, you know. So you know, people are really looking. Do you get a lot of international people that are investing with you, or mainly it's US?
I no, I have a couple that want to invest, but the challenge,
Yeah,
I think that the challenge lays on the investor, because y- I can help find you a person in the US that can help on the US side, but really how investors work is, um, you have to establish a United States LLC, just a business entity
yeah,
that is going to invest in our deals. But then out of that, you have a US tax advisor that helps you manage that money get transitioned to your local currency, and then you have to have a local tax advisor on your end helping you manage there. So you have essentially two tax advisors in two different countries helping you manage your money to prevent you from getting double taxed as much as possible. And because the two countries have two different rules, every country, your play is different in every country.
mhm,
So it kind of, when they say I want to invest, what I'm like, cool, you got to figure out how to establish that LLC over here. If you need my help, I can give you some resources, but I think
yeah.
people, what I've seen, people don't pull the trigger.
Yeah. Which again, there's a lot of other international investors who have that capital, you know, and they're investing. Like
Yeah.
China is buying a lot of properties. So you know, I'm sure
Oh
Russians
yeah,
are
yeah.
getting hands in. You know.
China. I mean, even back when I was in Seattle working at Boeing, in the late 2000s, China was coming in and buying up homes relentlessly, and making, to be honest, making it hard for us younger engineers to go buy a house.
And
I don't know.
they're buying over a ticket, so they're paying more, right?
Yeah,
Yeah.
that's the problem, is they'll go in and bid up on everything. There was starting to become talk within the local government about preventing international investors from coming in like that, because it was arbitrarily making things cost too much.
Yeah, of course, yeah. But again, it's United States. It's driven by capitalism.
Yeah,
Which is
it's,
great.
yeah.
That's how you make things work. Things don't work like that in here in Europe. I was talking with people, about somebody asked me about multifamily properties and investing, and we was talking about the fraud, which is obviously a big piece right now. There's a lot of there's a statistic somewhere. It's like the numbers are staggering. We're talking about either 500 million or 900 million scammed in terms of rents, vacation rentals. Somebody sends you an email. It's an attorney. Please sign this and make a wire transfer. It's crazy what's
So
happening.
you're saying like 500 million a year is lost to scams?
Yeah, yeah.
Yeah.
The numbers are huge.
Yeah,
But
and credit card skimming and all of that. It's
yeah, that
crazy.
regarding real estate. So I'm speaking to
Oh,
specifically
yeah, okay.
real estate sector. And of course,
Interesting.
there's a lot of that happening right now, and we kind of talked about AI, right? Because AI is a big part of it, and specifically asked about integrating AI into either communications, maybe underwriting deals,
Yep.
transactions, anything like that. Even creating a PPM, maybe putting some fancy stuff. I don't know, but he said no. And when he asked me about what's happening here in Europe, obviously there's maybe more regulations, but with that, people don't get scammed. But again, you to buy a deal here, you already need to be an institutional investor. I mean, who has $150 million to buy a 150 unit deal? By the way, so
Yeah.
it's
Jeez.
yeah, it's crazy. But we had some international. I think. Well, what is the company name? They bought some properties here in Dublin as well. A few years back. It's a company out of US, which one of those companies that have 300,000-400,000 units. So
Yeah, Ireland's an interesting tax haven, because didn't Microsoft, or was it Apple, set up their headquarters over there, so they were avoiding US taxes?
yeah. Yeah, but again, but there is no other location like that in Europe, because why Ireland is so popular. Obviously, the connection with US, and there's obviously the history go way back of
Yep.
Irish people going, obviously Boston and different areas. We're started to live, and now we see third, fourth, fifth generations. People living there. But there is no other country actually here in Europe that would be English speaking country besides UK, which is UK. They're Brexit. They left Europe. They said we don't want to deal with Europe anymore. We're just going to run things on our own, create our own economy, which doesn't work for them a little bit. But that was their decision. So there is no other actually country like that favors companies like Microsoft, Facebook, LinkedIn, Google that might speak English and have these universities, great universities. So that's kind of one of the predominant reasons why those companies coming in, right? They're well-educated
Interesting.
English-speaking people, and obviously taxes. That's a big portion. So speaking about the future now, as you kind of continue to grow, and again, as I said, you have your hands full running now these projects and having your hands on the $30 million project that you're developing right now. What do you think the future for you is going to look like? If now we look, you said it took 10 years to make decisions. So now where you are today, next 10
Yeah.
years, what do you think that's going to look like? Do you have a specific goals or targets that you're looking to achieve?
I do have goals of what I want to do, but keeping yourself open to opportunities that present themselves, the whole luck thing, right? It's
Mm,
where the cross between uh, preparedness and opportunity meet. So I do want to buy businesses. I want to start investing in businesses.
you wanna you have your hands in a fintech company right now, also, right?
Yeah, yeah. Uh, I'm surprised you know about that, but yes, yeah, that one we can't talk about because it's confidential under NDA. But yes, it is a startup, and I
Yeah.
brought my investors into a potential unicorn, which is really exciting. And if you would have asked me 2 months ago, Flinter, would you ever do angel investing, startups, or would I do it with investors? And I would have told you no. I don't know that I would ever say no myself to to doing risky plays like that, but bringing investors in is especially hard because it has a lot more risk level. But this particular deal presented itself, and I'm like, you know what, I got to bring my investors in. I got to allow my investors to have this opportunity. So
Again, as I said, you have to be right once. Again, if you're speaking about the possibly a unicorn company,
yeah,
imagine how many companies, because when Jeff Bezos was raising for Amazon, I think he raised like what, $1 million from like 10, 16 investors. So imagine the investor that he met and he was like, I don't think this is good.
yeah, too risky. I don't like online books. Yeah. Yeah, so we got presented this thing that's has a lot of legs. But beyond that, when I say invest in a business, I'm talking like just invest in a local business, whether it be a plumbing company, HVAC company. It could be a car wash. I mean, I would love car washes too. That has some real estate components, which is fun. Yeah, so I'm going to keep my eyes open. Probably in the next year, I'm going to really start thinking heavily about buying my own businesses.
Interesting. Yeah, because it's definitely good. I mean, because there's now with where the internet is, and there's a lot of smart people around, and I've seen that too. That there's some really good businesses being created, especially in a fintech. I mean, there's a lot of money being made right now with fintech in fintech.
Yeah,
So it's going to be interesting to see, obviously, and for you people, if you guys are watching this on YouTube, or if you're listening this on a podcast, you can connect with Flint, which again, you're going to find the links included to his LinkedIn and whatever else links that he happy for us to include.
yep,
And obviously, do recommend for you to go and connect with him, ask him questions about the current existing investment. As it typically goes, you provide a substantial amount of, again, education for people. You have the site, vestuscapital.com, webinars, podcasts, commercial real estate articles. So again, if you're a beginner,
yeah,
you're looking to learn more about that, great stuff. So again, I think the active and passive investors are going to find benefit here, while
yeah,
visiting the website. So, look, pleasure to meet you. And again, a very interesting story. As I said, I have, deep passion towards aerospace sector as well. Been involved, with that, and it's an interesting crowd of people. Very interesting people with interesting stories, just like yours, right? And I don't know, maybe in some cases, I think engineers can be even more successful at this, right? Because you're very, I would assume, an analytical person, right? And I think when it comes to deals, analyzing deals, being diligent, right? Being cautious. Sometimes it's not a bad thing. Maybe it slows you down, but an investor, I think they want to be comfortable with whoever is making that decision, and that it is a right decision, right? So at least it would
yep,
make me comfortable with investing with this type of person.
yeah.
So
It's every new investor is a different investor journey, but a lot of it is education, purely out of the gate. And I prefer my investors to be more educated, and you don't have to come in educated, but I'll help you with the resources to learn, so you get more comfortable understanding the business model and what we do. It's not complex, but it definitely helps you understand what you're going to invest in.
awesome, cool. All right, Flint, I appreciate you once again. Cheers. Great.
Yes, appreciate it.
Thanks.